All right, let's recap the markets today. The way I see it, the markets bounced, especially the S&P and the Nasdaq. They're the ones that I think created the support for the others to bounce from. So we'll take a look at those later. So markets bounced slightly up. The rates slightly down. It's just consolidation because they've made a heck of a move up. So it's just sort of sideways action, maybe a small retracement near their horizontal highs. We'll take a look at that too. The dollar continues to move higher. I still think we're going to go to 105.5 or even 106 on the DXY. Looking for a close above 106. Commodities, it's a bit mixed. Notably, natural gas, that was up strong, 7%. I think we're starting to put in a bit of a bottom. It bounced off the breakout of the descending trend line. We'll take a look at that. I think it's bottoming, famous last words, but yeah, I think so. Oil slightly up. Okay, there's a bit of geopolitics in play there too, but that's also massively oversold. Gold and silver, however, I think still have more downside. I'm looking for that 1800 on gold, especially with the dollar continuing its move higher. Copper went down, whatever. We'll take a look at everything, but that's the nutshell. So let's look at the S&P. As you can see, I think we bounced off here. I did say we might have a very short-term bounce. Yesterday was almost that. Today was more confirmed because the wick, the tail actually went lower, hit this ascending line. And I think this is pretty obvious ascending support. And then we had a higher close. It's a nicer hammer. So this is slightly bullish. The way I see it, we just move a little bit higher and then fail. This little sort of, well, that's quite straight actually. Yeah, prior support, and I'm really zoomed in here. This is really zoomed in, detailed. You almost have to take out the 15-minute chart to see it a bit better. But, prior support will become resistance, will fail there, and then, eventually lose this ascending support. And actually, things are moving quite quickly. So the last time I drew this to suggest we're going to just go sideways and drop, it happened the next day. So it could just be like that. So that's why we bounced, in my opinion. Also, I said the Nasdaq. I actually meant the Dow Jones. The Nasdaq, there's no obvious support zone. It's just, okay, there's a double bottom from yesterday. But I think the reason that the Nasdaq, bounced and everything bounced is because of the support in the Dow Jones. There's a bit of support between these two lines. It is quite, there's quite a distance between these two, but still, you can see why I think that. You've got these little wicks here, actually down here too. You could say it bounced off the lowest wick of these, and then the all-time low, if you want me to call it that. I just feel like the Dow Jones, which is more defensive, let's say, and then the S&P, they're the indices whose trend lines created the support for the others, such as the Nasdaq and the Russell, to also, sort of act accordingly. So it's just, otherwise maybe there's a trend line I can't see, but to be honest, I usually catch them and it wasn't as obvious. So for me, it's the SPY and the Dow Jones. So my intro was a bit wrong there. I meant the Dow Jones rather than the Nasdaq. Anyway, the VIX just acted accordingly. I think it was a little oversold. It's a little too much, 5% down just for, the market's not even up 1%, but I guess it just had to close that little window. So I expect just a little bit low tomorrow during some part of the day, and then maybe we start to move back up. And I still think we're going to get to 26 because I expect the VIX to go up as the markets drop. I still think that's going to happen. Let's move to yields. And I'm doing this video quite late, so they've kind of reset now, but you can see this Thursday red candle here, sideways right at the top. You cannot say that's bearish. I mean, obviously it looks like it's going to come down a bit, but completely understandable given the run we've had. So, even with the 1 year, just a little bit of a drop and move higher. That's what I think is going to happen. 2 years, same thing. Little drop and then move higher, but who knows, could just do that. The point is get the general direction correct. I think we're going higher. I've said that for a while actually, so normally I'd be a bit of a contrarian at this point, but I just don't see why yields will not continue back to their old highs. So same thing here. I've been saying it for a while. I thought it would go sideways a bit more, but it went higher. But same thing, sideways and higher. 10-year. Yeah, I mean, I just don't have to touch anything, just sideways and up. You can see just consolidating after already taken out this horizontal line. And the 10-year is very important, of course, just like the 30-year, just a bit behind, sideways and higher. The EU yields, same thing. It's really a global movement, to be honest, just sideways and new highs. And that should really smash the DAX. Even the British yields have already reclaimed their old not their old all-time high, but they're also moving in lockstep. So it's really like a global. Okay, I'm only looking at Europe and the US really, but Western world wise, we're going sideways and up in yields, in my opinion. Let's look at the DXY, which actually is still outperforming the yields for the last 2 or 3 days, but otherwise generally following in the same direction. So you can see that's just made a new move up. So a new high close, ventured higher than the last couple of days, then several weeks actually. So I don't see why I would change my thesis in thinking this is just going to do what the yields have already done, which is touch their horizontal, go sideways, and then back up. But then again, I do feel like there's going to be quite a bit of resistance on the way up. So, and then of course the in the other currencies you'll have like the euro will just move down, dollar versus Japanese yen a bit higher, maybe continue with this ascending support. The pound will move lower, etc. as the DXY moves up. That's kind of obvious. Let's look at commodities. So this is a pretty mixed picture. Copper. Now, I did think it would eventually come down here and lose ascending support, but I didn't expect it to be down this much on a day when the markets are up. So it did actually move up with the markets, and now it's down 3%, which is pretty decent move down. And that is whilst the markets are up. So for me, it's gonna definitely, I'm more assured now that it's gonna, lose its ascending and go lower. And I just feel like it's gonna come back down to this zone. So I maintain that outlook. Okay, I'm not sure there must have been some supply demand specific to copper for this. So I'm not sure why it deserves to be down 3%, given that the market's up, yields are down. Okay, the dollar's up, but not that much. So there must be some story I didn't read, but otherwise, I still think it's destined, and even more so now, to come down after losing this ascending support. Let's first lose the ascending support, and you can see that there are two areas, not only this ascending support line, but also this very short-term horizontal. So basically, this area here is key. So a close sort of below that, and it's $4 psychological. So there's sort of three reasons for this to be attacked. Natural gas. So, this breakout line for me was the line in the sand where, okay, I'm bullish, and that was around here. But I've been bullish. Honestly, I was bullish at 3.5, and then I said, okay, leave it at 2.5. And when it was here, I said, no, now all systems are go. And then obviously it goes back down. But when you think about it, obviously, I still said the general areas to buy, have a several month outlook, and you'll see that buying, here at 2.5 or at $2 or even 1.5, there's not very much difference, believe it or not. That's the way I look at it. But if you look at this breakout here, now I was getting bullish around here, and it's slightly premature. We broke out. I thought, okay, let's be bullish, and then that's the high. But actually, this zone, and obviously now, if you were to take out this zone, it would be super bullish. I mean, obviously nothing is guaranteed, but it doesn't really get better than that. But if you think about it, all it did was go back down and hit the breakout line, the descending line. It breaks out of it and then comes back tests it. And that's typical in breakouts too, even though it went lower. So to be absolutely bullish, I think a close above this horizontal line is just absolutely guaranteed, almost. So 2.7 close. Once you see natural gas at 2.7, you can be almost assured that the bottom is in for now. And imagine what that the daily chart will look like. We'll have another sort of big green candle probably here, and then you're gonna have all the shorts covering. You're gonna have momentum traders, day traders, value traders, whatever. Algorithms, just an absolute fiesta, and it should just pump higher. That's really what I think will happen. And again, have some perspective, zoom out, look where we are. This is ridiculous. So of course it will have the momentum to at least snap back to 3.5, 4, maybe even eventually 5, even this horizontal line eventually. And we've got a little gap to fill. So for me, you could even buy at 2.7, and yeah, you would have missed a bit of the party, and you're sort of buying the high, but you've still got, risk reward wise, a great chance to make some decent percentage moves even after buying 2.7. So natural gas, 7.5% move is exactly what it needed. Now it's starting to look very good. And I think the point I'm trying to make is even though it broke out of this and didn't sort of close above this horizontal, the fact that it hit this back test and it's moving back up is still bullish. So I still think this entire zone is very bullish. So anyway, that's what happened in natural gas. I will not be surprised if it keeps going higher. Oil, okay, it's closer to the bottom of the range. It was up today. It is more of a buy than sell down here. I mean, overall, if I had to trade it, I would buy it because I think we are going to go to the low 90s. And actually, medium to long term, we're going to be above 100. You know, let's say in 9 months from now, I expect oil to be above 100. So yeah, it's not the worst to be buying down here. Okay, the dollar was up, so oil being up also indicates a bit of strength. Was there some supply and demand news specific? There probably was. But yeah, like I said, you know, this area here is very strong support, and in this case, there was some buying just beforehand. Let's see what happens. I'd also like to see how oil interacts with the dollar going up. If it does go up, I think it will go up to 105.5, 106, and maybe even higher a few weeks later. So I'd like to see how oil reacts to that. But oil going up, I think Russia wanted to cut prices by 25%. Sorry, cut supply to increase prices. I think I saw that somewhere, but you know, that's related to the war. I still think that oil will go up because of the war, one way or another. And yeah, I just expect oil to be higher. So let's see. Good buy zone. Let's look at gold and silver. So gold and silver, yeah, they've reset now. So they were actually red. You can see this Thursday candle here. You know, now we're venturing in the low 1820s. I think we even went below 1820 at one point, or almost. Yeah, 1819, 1818. So, you know, that 1830 zone kind of, and obviously we closed, we haven't settled yet, but, you know, we're below 1830. So I don't see why I don't see gold going back to 1800. I've said it. I said 1830, we could lose that, go to 1800, and I think we're eventually going to get there. Maybe not on Friday, maybe on Monday, but if the dollar can keep going up 105.5, 106, why not have gold go to 1800? And you know, when you zoom out, you could even make a case for it to go lower if there's a market crash and everything sort of goes down together. We know exactly what I'm talking about here. It's one of those, everything gets routed, pure fear, not even gold is thrown out. So we've seen that before, and that's when there's just the VIX up, dollar up, and absolutely everything red, even if it doesn't make sense. So if you have that kind of a market crash, of course, you could see gold give all of this back, straight back down to the mid 1750s or even lower. And who knows? So it's just funny to think about how people will start to feel if we start to lose 1800, because I think we will get to 1800. But, you know, if you start seeing 1700 handle on gold, just remember how everyone was up here at 1960. And even me, I was thinking, oh, no, I'm going to have to buy back my miners. We've come down quite a bit, even more so in the miners, actually. But I just don't see why it can't keep going because of the dollar. And again, yields, right? I mean, the dollar going up is one thing and it's still going up, even with yields going sideways. But what if yields start to go up with the dollar and then you've got a market crash happening? Of course, you could have gold come down more than below 1800. So for me, gold was red today. The dollar was up, and that's despite the market being up. So for me, gold can still go down to 1800. I still have that in mind. Silver, weaker than gold. It's typical on the way down, and we're very close to $21. I mean, look at this 21.30 here. You know, 1.5% to get to that 21 target. I haven't really predicted a move lower in silver and even gold. I haven't even put in a target below 1800. I know it's possible. And now I'm talking about it because we're quite close. But for me, the lower end target was 1800 on gold and silver 21. We're basically there. We're 1%, not even 1.5% away in silver, which can happen, you know, in 10 minutes, a move like that. It's nothing. And in gold, we're not even 1% away. So the way I see it, those targets are hit. And I've only bought one tranche, really. I nibbled a tiny bit up here on this break down back to the 1860 level here in the channel, but it was nothing to write home about. It was extremely weak buying. It's just because I'd sold so much on this move up. And all the way up, actually, I'd sold, but especially up here, I'd sold multiple times. I wanted to buy something back in case this was the low, because we were all so bullish up here. And then since then, honestly, the only buying I really did was around here, 1830. There was one day just before, just in case it didn't get there. But basically, my average buying, most of it is just around 1830. I'm not buying anymore until we get to 1800. It'll be a weak tranche too, because it's not that far away from my first tranche buy. And also because I know deep down that if we're at 1800, there must be something going on with the dollar and yields, and maybe the markets are going to crash. And if that happens, for sure, gold can come back here and still be very bullish, by the way. So it's just to say, I'm very happy that I held off on chasing gold, and I'm very happy I sold it on the way up. And here, I just sort of a reminder that we're quite low. We've come down quite a bit, and so much so that I haven't even sort of put in my buys below. Anyway, that's gold, that's silver, silver 21. Let's look at the miners. The miners have come down more. Now I have started to put targets just sort of because I'm looking at it, just licking my lips here. I think the ascending support is the next one. It's quite hard to tell. I was drawing these earlier, and with here, we're at support, okay? But like I said, the markets will bounce. The general markets, the S&P, the Nasdaq, and all that, they'll bounce a little bit, but they'll come lower. Now, to be honest, we haven't really had a bounce yet. Look at this. This is a great descending to break out of. We could have a nice bounce actually in the minus, just sort of 3-4% in one day, and then we have to see what the market does, the dollar, the yields, the usual suspects, and to see how they all sort of interact with each other. Is gold going to follow the dollar, or is it going to be inverse? Does it follow the markets? You've got to see that correlation before you can sort of be sure for your next trade. For me, I'd love to buy some down here, but I think we'll bounce before there. So honestly, I'm just going to wait and see. I do think gold will get to 1800, silver to 21. So once they get there, I'll probably buy my next tranche of miners. Hopefully it coincides with ascending support here. Then sort of all the stars are aligned. And I don't mind if it goes even lower, but I expect this to be general support. So I'm looking to buy my next sort of miners around here, or when it goes to 1800 and silver at 21. GDXJ, okay, the targets are a bit bigger. It doesn't really make any difference. It doesn't mean anything anyway. Here we add a target. You can see this heading support. So we add a target. And again, I do expect a bit of a bounce, just like the GDX. We're at a horizontal target, and we've come all the way back down, really. So for me, this is a general support zone. They're both at support, just like the general market. So I think a small move up and then come back down again. Okay, so really just 1 or 2 days, and then come back down, something like this. It tends to happen a lot quicker than the time periods I'm drawing out, but just to show you what I mean, just sort of, in fact, I expect a bounce tomorrow and then a move down. Yeah, that's it for the miners. I mean, let's see if they bounce. But again, now that I'm looking at this sort of descending line, we're very tight. You probably have to go to a 15-minute. See, now there are too many lines. I hate all these lines, but they all have a meaning behind it. You can see this descending on, though. A breakout of this, which can happen, it could just open above it tomorrow. And then we're going to move quite a bit. But I still think we're going to come low, because the same forces that have pulled this all the way back down are going to be in play very, very soon after this bounce, and even more so. So yeah, if there's a bounce, everything I bought around the 1830 zone, if it's in profit and I'm so sure we're going to go back down, I'll just sell it all, take small profit, and just wait to buy it back lower. Got to swing your long-term investments. You just get so much more juice out of it. That's my thoughts on the miners. I'm going to try and delete some of these lines because they're starting to annoy me, but they all should play a role. So they're not there unless I think they deserve to be. But I don't like how there's too many lines. That's also why I don't throw in the 50 moving average, the 200. I go with what works for me. I'll finish very quickly on Bitcoin. You know what? Bitcoin, just following the market. Well, actually, no, because the markets were green. Still kind of bullish, we're just sort of, it hasn't come down much, and we're still hanging around above the old high of this zone. So for me, until we break and close below this ascending, I can't say that I'm bearish. So if we have a bounce tomorrow in the markets, you could easily see Bitcoin straight away test its highs, but I do not see Bitcoin closing above this 25,300 zone with the markets sort of the way they are. The markets are in a downtrend at the moment, if you sort of really zoom in. So you need the markets, especially the Nasdaq, sort of going back up and indicating the potential to make new highs for Bitcoin to go higher. So I just see I just see Bitcoin just moving up a tiny bit with the markets tomorrow, because I do expect them to bounce, but not closing above the all important 25,200. And you know what that will do for tonight? See you tomorrow. Yeah.